Good afternoon, London, and good morning, New York. And thank you for joining this virtual roundtable session hosted by Evident today. In the next hour, we're going to provide a direct download on the key findings report released alongside the updated Evident AI Index last week, as we try to unpack the following key questions. Who's winning the AI adoption race? How has that changed over the past year? And most importantly, where are we seeing explicit links between AI investment versus AI outcomes? So that's an ambitious agenda for the next hour. So without further ado, we're going to do a little bit of housekeeping, and then I'll introduce my co-panelists. For those joining us today that don't already know us, Evident is a benchmarking and intelligence firm focused on measuring AI maturity within the wider financial services industry. To that end, Evident does three things. We publish an authoritative ranking of AI maturity focused on the largest financial services firm. We expanded from banking to insurance this year with more sectors to follow in due order. Second, we publish supporting research, insights, and data specific to each component of our methodology, which we'll get into in a second. This allows our members to double-click into the materials that are most relevant to their role, their responsibility, or their day-to-day function. And third, in addition to this virtual event series, once a year, we bring together the largest community of senior leaders at the intersection of AI and banking at our flagship symposium event held in New York, which coincidentally is 1 week from tomorrow. So that brings us right to the topic at hand today. Last Wednesday, we released our fourth index and the third ranking profiling the AI efforts of 50 of the largest banks covering North America, Europe, and APAC. The key findings report that accompanied the ranking provides an overview of our approach, profiles of current leaders, breakdown of individual performance profiles, and a deep dive into the supporting pillars of our methodology. Speaking of which, here is a bird's eye view of what we're measuring and why. At the highest level, what Evident does is fairly simple and straightforward. We define an industry, we define a representative sample of companies within that industry, and then we go out and collect thousands of openly available data points on each of these organizations. We then organize the data set into 70 scoring indicators that ladder up into 10 subpillars and 4 primary pillars of analysis. This includes talent, inclusive of talent capability and talent development, innovation, the ecosystem comprised of research, patents, venture activity, and engagement with the open source community, leadership, spanning both AI narrative and the executive positioning and amplification of that narrative, and last but not least, transparency or responsible AI activities, again, specific to talent investments, innovation investments, and leadership investments. We view these pillars as the primary enablers accelerating AI maturity in the current marketplace and ultimately unlocking value from ongoing AI transformation efforts. As the name of the product implies, we index an individual bank score against the peer set within their native industry to provide an overall performance benchmark, which ranges from 0 to 100 points. Throughout the course of the presentation today, we'll be sharing data from each of these pillars to give you a better sense of what we're measuring and why. So with that, we're going to conclude housekeeping and bring in panelists who need no introduction. My name's Colin Gilbert. I lead the intelligence unit here at Evident. Of course, I'm being joined by our illustrious co-founder and co-CEO, Alexandra, and also Daniel, who's the managing director in charge of the banking sector in particular. Alexandra, Daniel, welcome to the show.
Thanks, Colin.
Thank you, Colin. So I think without further ado, we'll just get right into the results of the ranking as we have a lot to process today. The first slide and kind of the anchor point for, or the jumping off point for the key findings report is this chart that shows the distribution of the 50 banks by their overall score in the Evident AI Index and how it's changed over the course of 2003, 2004, and 2005. As you can see, the index average is steadily increasing year over year from 30.4 points to 32.8 points to over 36 points today. But as you can also see, if you look at the right tail of kind of that distribution of dots, the leaders that have remained very, very consistent year over year are also starting to pull further and further ahead. So based on this view, I really wanted to go, Alexandra, to you first and ask, why do you think there's such consistency at the top of the index? 3 years, 3 leaders in the same podium positions. Maybe we can start with JPMC.
Yeah, no, thank you so much, Colin. And also, I can see great questions coming into the chat already. And so everyone on the call, please do put your questions in there. We'll try and get to them. Or Colin will be the mastermind of this, but we'll try and get to them as we go through the presentation today and weave them in. So please do put your questions in there. But thanks so much, Colin, for teeing this up and for the first question here is sort of the consistency of the 3 banks that are JP Morgan, Capital One, and RBC that remain in the top 3 positions in the index. And as you can see on this chart here, you know, it's not that the sector is standing still. On the contrary, the average score is the biggest jump in average score since our, the beginning of the index. But the 3 leading banks are out front there with more than 9-point gain compared to the average 3.7. And that's a lot in a very competitive space where everyone's doubling down. The leading banks are doubling down more than anyone. And so the question is, to your point, Colin, sort of what is that about, and what is the characteristics of these leading banks? And maybe just to flag a few things is that this relentlessness of focus on the operating model and continuation of the sort of upping the spend, making AI spend a bigger proportion of the overall tech budget, the constant movement of that big innovation machine inside these banks that are going at a pace that is so head spinning. Actually, we'll get to the numbers in a minute on this. And also just hiring talent at a much higher pace than all of the other banks. And that does speak to the fact that we're in a sort of a next phase, if you like, of the adoption or the AI deployment cycle. There's been 2 years of testing, 2.5 years of testing since the release of ChatGPT. And now these leading banks are very much moving into the next phase, which is all about value creation, AI deployment at scale, thinking about completely reconfiguring, rewiring the organization, thinking about all of the workflows that can be touched by AI. And so really doubling down into that full-on deployment phase. And that we're definitely seeing in the numbers, because with that deployment phase, you up your innovation even further, you up your talent pool, and you sort of double down on all aspects of your deployment. But you also mature your your return on investment models, and we are seeing these ROI frameworks definitely mature among the leading banks to also be able to talk a bit more about explicitly about what they're deploying, what they're rolling out. And so we've seen that ramp up as well. And the much cited MIT report that I'm sure everyone on this call will have read and have views on, and I would love to hear your views, by the way. But very much in agreement of the sort of the direction of travel of what it was saying. We're still very early days, 5% of successful use cases, sure, but we're just in the foothills of this, and we expect to see this ROI really come through in the next 2 to 3 years on Gen AI and on agentic AI, probably a little longer than that. But what it also pointed out was the fact that the sort of focus on the plumbing, on the data, on the people, and on the organizational maturity in order to be able to run AI on it. That was definitely what was holding it back. And we agree with that. That's what we're seeing. The technology is there. It is not a plug and play. It is a question of really working very hard on reconfiguring your organization that has a lot of legacy data, legacy systems, fragmentation, but but knitting that all together in order to really run the Gen AI and agentic AI workflows and use cases on that. So that's a quick sort of
Yeah.
reflection here, Colin. Back to you.
And maybe on we can stay on the ROI point for a second. And Daniel, I wanted to bring you into the conversation and get your hot take on Capital One, because as you can see on the chart, in the number 2 position, as it surged ahead alongside JP Morgan Chase, it's also narrowed the gap between the two banks. And Capital One has a fairly unique performance profile that we called out in the report, because it doesn't disclose ROI necessarily to the same degree that we see of immediate peers, but it's doing other things that really underscore that profile also, that, and should be said, in the midst of a massive merger with Discover Financial Services a couple months ago. So can you tell us a little bit about what's going on with Capital One?
Yeah, of course. So Capital One is really like, it really shows, right, that you don't need to be a giant bank, right, albeit it's a big bank, to really punch over your weight on AI, right? So the Capital One is really reaping the benefits of continued investment in technology for the past decade, right? Like they were the first bank to move move completely to cloud. They have a scalable foundation that allows experimentation. They really focus on nurturing that talent base. So they've really created a technology analytics first culture. And their profile is interesting, as you say, right? Because they talk less than others, but that doesn't mean that they do less, right? Like they are clearly very strong when it comes to the foundational capabilities of AI, both talent and innovation, right? Which are the most heavily weighted pillars in our methodology. And that just speaks volumes of the strength of the organization, right? And how they use their people to embed AI into their products and services across the value chain. And they're a very innovative company, right? Like they publish a lot of research, they have a lot of patents, and those are just manifestations of the internal culture of the organization. When it comes to leadership, where in our methodology they do less well, it's interesting because this is a deliberate choice by Capital One. So they're choosing to disclosing less. But when they do, it's really interesting what they disclose, right? Because, for example, this year we saw they disclosed the first multi-agentic framework with their chat concierge. Mm-hmm. They're also very vocal about their platform, like their workbench, on other interviews that we've seen in the media. So it's they're choosing to not disclose as much as others, but that again doesn't mean that less doing. So like this really showcases, right, that you need to commit as an organization to build, to scale, and really sustain those innovations for a long time in order to be able to be at the top of the game.
Excellent. I think we'll return to that theme of who exactly is disclosing what type of ROI and whether or not it's, incidental or idiosyncratic with regards to use cases or more comprehensive with regards to everything across the enterprise. But before we get there, I wanted to pull back from the leaders and look at the wider index. And so this is a analysis we repeated from last year, now that we're getting more and more longitudinal data in our system. And I think it's interesting because it's not just the top 2 pulling ahead or the top 3 pulling ahead, but the entire top 10 cohort. When we actually take the average of the changes in score year over year, the top 10 are increasing at a rate or pulling away at a rate that's over 2x the index average. And as you can see, as you go down from the top 10 to the top 25 to the bottom 25 to the bottom 10, it's just a straight waterfall to basically standing still at the bottom of the index. So, Alexander, I'm curious, what do you think are the consequences of this bifurcation between leaders and laggards? What does it mean for a bank that's trying to catch up when you have this elite cadre of banks that's really racing ahead at breakneck speed?
Yeah, no, and I think we were all surprised here at Evident just to see the gap growing so quickly between the leading and the lagging banks. When we pull the data together, when we were running the results from the index, the 2025 ranking was just really surprising to see. I mean, maybe not surprising, but to see how fast the banks are moving, how fast the leaders are moving, but just the differentiation in the speed, making the gap between the leading and the lagging banks just growing ever faster. And it is concerning in the sense that there's a real race for AI deployment in enterprises in general and in banks in particular. And this is a really existential race. And it is becoming clearer, the existential nature of this, because the leaders are able to start to reap the benefits of early adoption, the characteristics of the banks that they started early. Again, as I was talking about earlier, this sort of doubling down and the sort of relentlessness on refining the operating model and then being able to attract that talent. As we know, talent is destiny in a sense. And so being able to enter that positive flywheel also means that it starts to show up in, leaner costs. So your cost to delivery comes down, better customer interaction. So you're growing your market share and so on. And that starts to become a problem for banks that wait, because it takes time to do what these leading banks have done. It takes time to reconfigure, rethink your organization, to centralize your workbenches, to centralize decision making, to make sure that you're not creating bottlenecks, that you've got the tech stack that you need, you've got the right structure on sort of what's on the cloud and what's not, and so on. And to work out all of that takes time. So the longer banks wait, the more difficult it's going to be to catch up. And back in the day, we used to talk about too big to fail. Now we're talking about too late to compete. And I wonder whether we're going to be in a point in time soon where some banks that are doing a wait and see are going to be at a point where it's too late to compete, because the sector as a whole has moved forward so quickly and are starting to really reap those benefits, where if you are, your bank has a higher cost to delivery, and your interactions with your customers are more clunky and less seamless, it really will start to hit the bottom line in not a great way. So but also we talk about, whether it takes to be a big bank to be in the leading cohort. And we often get that question with regards to the results of the index, and to the point about being too late to compete. We see many of the smaller banks actually being extremely competitive. You don't have to be a big bank like JP Morgan, although JP Morgan has all of the attributes of being a leading bank in terms of their focus, in terms of their commitment to relentless innovation and shifts. They also have resources, of course, but the smaller banks that do extremely well. I mean, as Danny was saying before, Capital One is not a small bank, but it's smaller than most of the banks in the top half of the index, and yet it sits at number 2. But we've also, for those who've not read the key findings report, we're spotlighting a bank, Ally Financial, which if it had been in the index, it would punch up into the sort of the 20s. So again, a really good example of a small bank that's leaning in, committed, focused, got a leadership focus, and focused on AI first strategy, and is able to really perform well and outperform some of the really big banks as well. So it's not a size question. It really is a focus, and it really is a dedication. It is also a culture question, really embed that AI focused thinking all the way, into the top of the, from the top of the bank into the heads of the lines of business, and making sure that everyone is equipped with that focus, that knowing that part of the KPIs is not just your financial KPIs, but they're also your AI KPIs. So the bifurcation is really true. The gap is definitely widening, and that existential race is only accelerating.
And it's a great call out on disruptors like Ally. And I think it's important to note that I think there's a lot of misconceptions from readers that don't necessarily go through the fine print, but we are profiling the 50 largest banks in terms of total assets, versus, not versus there's the possibility that the best banks for AI, or there are other smaller banks out there that can go head to head, at least in individual areas. And so with that in mind, Daniel, I want to ask you one question, and then we'll go to some audience questions that are really heating up in the chat. But off the back of Alexander's point, where can a bank that is not in that top cohort, where do you think a smaller bank can get the most bang for their buck? How can they punch above their weight class, especially if they're not already keeping pace with the investments that we see at the top?
Yeah, so I think here the answer, right, is clear in our methodology. We really think that talent holds the keys to AI adoption, right? Still humans control when AI is deployed or not. So we think that if you don't attract and retain that talent base in your organization, it's very difficult to really advance in AI adoption, right? Because you can't really build or enable your use cases, and there's just so much that you can outsource and you can rely on vendors, right? You need your people to really that really understand your organization, to really pick up the pace of transformation and to really embrace the transformation. And you also, without the people, like, you can't really catch up on frontier topics, on applied research and some of the patenting stuff, right? So people is key, right? But I think what we're observing, particularly in the bigger markets, is that banks are having quite a fight to get this talent, right? And it's not only with other banks, but it's also with big tech, right? So big tech, for some of the talent that is critical for banks, like applied AI engineers or machine learning specialists, like they're paying, and we're getting some of our clients to say, like, look, they're just making offers that are 2, 3, 4 times really large offers, right? That banks are making to this kind of talent, right? So while this might be something that is temporary because of the hype cycle, I think anyway, banks, if they want to really attract the talent, they have a very compelling value proposition. It's not only at the large banks, right, but also the small ones, right? Because I think banks, like, they're very stable institutions, at least in the last few years. They're increasingly becoming much more structures with their career pathways for technologists and analytics teams. So there's a lot of banks that now have IC tracks, which are very compelling to some of this talent. You also get opportunities to publish research, which are decreasing on the big tech world. And most critically, right, you are able to work on really complex, high impact problems that need to be resolved, and actually with probably a better work-life balance than what you get in some of the tech companies, right? So I think leading banks really now have a very compelling proposition to offer this talent, and are definitely able to capitalize on getting this talent, and they should focus on that as a first step, because people hold, as we said at the beginning, right, they hold the key to that AI deployment in the different organizations.
Excellent. So I want to sneak in a great provocation from the audience next. And I think it's important to answer this question against this backdrop of the top 10 cohort. And the question is, basically, is as the index continues to mature and kind of gain trust and awareness around the industry, is there increasing risk of banks trying to, quote unquote, game the metrics that we collect, especially since we're very transparent with the methodology? So keeping that in the back of your minds, I wanted to introduce what we see going on, beyond kind of the leadership podium and down to like the number 10 bank. And we saw that 8 of the top 10 banks last year stayed in this leadership cohort. We saw, as you can see, outside of the top 3, there was a little bit of churn. We saw a major jump from Morgan Stanley, +5 positions to the top 5. And we saw 2 new banks join or rejoin the leader circle in the form of Bank of America and Goldman Sachs, respectively. So, Alexandra, addressing kind of the gaming metrics, which makes me feel very important, by the way. But I wonder if you can talk about, what these banks have in common that differentiates them from the wider index. And what are some of the investments, perhaps very particular to the innovation rank, that are really hard to fake or game simply because they take so much time to mature?
Yeah, I mean, I do want to address, I think it was Michael Conway on the chat who asked the question around the gameability of the index. So maybe I start there and then we can go into the top 10. And Michael, great to see you on here. Always great to hear your questions and generally your thought on the sector as well. But it's a very good question. An outside in methodology that this is, as Colin was explaining in the beginning, these are publicly available data points. And with that, there comes, we are with this, we are beholden to what we can get in the public space. With that said, I would say that it's only about 14% of the index of the index weight that is based on disclosure-based metrics. So what the banks are talking about in terms of their rollouts, in terms of their strategy, in terms of their training and development. So even if a bank would say, we're going to try and hit all of those, there's the majority of the weight lies in things that are very difficult to game, which is very strong, this AI talent pool, and strengthening that takes a lot of, positioning, a lot of thinking, and a bank that's moving in order to be able to hire to the level that the average increase in AI talent pool this year was 26%. And that's difficult to game without a solid strategy and thinking around who you're hiring and the spend committed behind it. And likewise with innovation, that weighs 30%. So combined, that's 75% of the index that is based on sort of what we would call sort of hard metrics. The disclosure metrics that there are in there are, important for the bank's further development. For example, as Daniel was mentioning before, does a bank have an IC track? And it's incredibly important for part of the reasons that AI talent will join a bank. Can I publish my research? Is there an individual contributor track? Does the bank train its employees and senior management? What is the dedication and the commitment to AI? Can I see it from the outside? And can I see who's in the bank? Can I see from the outside who's there and who am I joining? And so a certain element of visibility is incredibly important for ongoing maturity and ability to deploy. So, while yes, one could say, I'm going to choose as a bank to make these things more visible. Yes, you might do marginally better in the index, but you're also going to position yourself as a bank that is better at attracting talent. But also banks are increasingly getting these questions around, what are they rolling out and what are they doing in terms of training in earnings calls. And so there's a lot of boxes that gets ticked by being somewhat more visible. And we've seen a real shift in the playbook of the banks in terms of what are they talking about. And we might like to think that it's because of the index, but it certainly is also because there's a big demand out there for clarity on what the strategy is and what the banks are doing. And not only just from shareholders, but also from customers. There's a big shift in what customers are expecting. They're preferring AI driven engagement and decisions, not completely fully so we haven't seen agentic, fully autonomous agentic AI out there in the wild without a human in the loop. But definitely there is also a pull from the customer and the client side that the smoothness and the depth of information that is now available is part of what they get when engaging with a bank. So I would say that's a long answer to your question, but yes, Colin, go ahead.
No, but I think a good one, especially when we think about how setting up a top tier research lab or building an intellectual property library or building the reputation to engage in tier one venture activities. These are things that are measured in terms of years to stand up, not months or days. But looking at the top 10 on the screen here and in the context of your remarks, do you see any common hallmarks or patterns that bind this group together when we're looking at either kind of it through a geographic lens or versus where they're placing when we kind of parse their scores, not at the overall level, but on a pillar by pillar basis?
Yeah, yeah, and I think, and Colin, when you and I speak about the results and so on, you were always pointing out the fact that this takes a long time, and when you're looking at some of the common denominators of the leading banks, is that they started this journey a long time ago, right? As we know, JP Morgan famously said, I think it was in 2017 or 18, that we're going to be an AI first company and establish the research labs and set that up. And it takes time. It takes time to build this. It takes time to attract that kind of talent and set this up. And now these banks, a lot of the banks are now reaping the benefit of these efforts that were made early on. Not to say that, like, with the same sort of commitment and things, if you're a bank that is still early stages, there is time. I know we were talking about that timeline might be a bit shorter now, but there is time to do that. But some of these things do take time. So to get to your question around, like, what's the common theme here, we cannot escape the fact that when you're looking at the composition of the top 10, 6 of the 10 are North American banks. And with Morgan Stanley rising 5, as you said, also Goldman Sachs and Bank of America entering or re-entering the top 10. So we've got more US banks in there that we've had in previous years. So that this is really interesting to see, because of course it begs the question of what are the common themes? And I think we sort of covered that. What are they doing? And again, it's like the action, it's the talent, it's the rollout, it's the being a bit more explicit about it. And again, this sort of question around talent as destiny, and that's something that all of these top 10 banks have in common. But the fact that 6 of them are North American is a question around, where you're based. Is that starting to have an impact on your AI maturity? The access to that talent, right? The access to the technology, that the proximity to that mindset, right? And the innovation mindset is something that, probably and definitely plays a role in the capabilities and the sort of the acceleration of these banks and the ongoing acceleration. And of course, we've got 2 great European banks, UBS and HSBC, in the top 10. But there is a different environment in Europe and in the UK that is changing, I think. And especially when it comes down to that sort of proximity to the type of talent that is needed to accelerate AI deployment and the type of technology that you need to be close to.
Yeah. And Daniel, can you give us a little bit of an insight into Goldman Sachs and Bank of America that are highlighted as the new joiners to the top 10? Especially, this is very timely in light of during Goldman's earnings call yesterday, they started talking about in a lot more detail an AI-driven operating model moving forward into the next couple of years.
Yeah, that was a very timely and very reflective of where the organization has been going in the last year and why it's rejoined the top 10 in our ranking, right? So, I mean, Goldman has always had a very strong talent base. They keep adding incredible talent on the AI front. But where we've really seen the shift has been really on their external positioning around what they're doing in AI and their progress in AI. They really flipped the script, right, in the last year. So we've seen Marco Argenti being very vocal about where their AI strategy was going. And as you're saying, right, yesterday, the One Goldman Sachs 3.0 propelled by AI really unveiled a really ambitious agenda around front-to-end transformation of critical processes in the organization, including sales enablement, client onboarding, lending, reg reporting. So it's really covering the most critical processes of the organization, and we're very eager to hear more about it in January, right? It'll be very interesting to know how they're doing on that front. And then Bank of America is another interesting one, right? Because they've always been strong, but never managed to get through in the top 10. And this year they managed to get on the top 10, and they've really upped their game in innovation. They've been traditionally really strong on patents. So we saw a lot of that, and like we really saw from them last year in October what is the value of having a strong patenting strategy and how they protect all of their innovations through patents. We also saw in April their update on AI adoption and how they're rolling out their assistance to more than 200,000 employees, right? In what is, if not the biggest, one of the biggest rollouts in the industry. And then their new CTO, Harry, right? Like very quickly after he was appointed, he really went double down on AI and said he was earmarking 1/3 of their budget to push, among other advanced technologies, AI, right? So we've really seen Bank of America really up their game again this year, like many others. But I think there's another interesting story outside of the top 10, right? Just outside the top 10, we have quite a number of banks, right? Like BNP, BBVA, Citi, TD, all of which are very strong in their own ways and have really been pushing hard, right? So BNP has this year revised their projections of ROI and returns that they're going to be making from AI upwards. BBVA, right, has been since 2017 pushing, saying that they're not a bank, right, that they're a data-driven company, similar to the messaging that JP Morgan has. And then TD recently committed to making 1 billion, right, in AI returns last week in their strategy day, while Citi was announcing like a huge rollout, right, of agentic applications. So we really see a lot of competition there in the top 10, and we're almost seeing more than a top 10. It's almost expanded to a top 15, given how strong everyone is performing.
Yeah, I think you're absolutely right that I think the banks from number 11 to number 15 all increased basically proportionally by the same degree, which was like close to +8 points. So incredibly competitive for that coveted number 10 spot. One of the things that both of you brought up that connects to an audience question is, one of these common hallmarks across all these banks is increased disclosure of not just use cases, but the outcomes from those use cases and the ROI from those use cases, and much more comprehensive reporting, even from select banks that suggested that wasn't going to happen even a year ago. And so the one that I really want to zoom in on is Morgan Stanley. And if on the left-hand side of the slide, you basically see people's rank positions going back 2 years. And on the right-hand side, you see the percent rank of Morgan Stanley across each of the 10 sub-pillars. As you go in clockwise order, you see talent, innovation, leadership, and transparency. And basically, the bigger your polygon, the better you score in the individual index. And we can see these year-over-year changes, including this big enhancement in like the lower left-hand quadrant that is really tied to some of those leadership elements on use case disclosures. So I want to start with Alexandra on what distinguishes Morgan Stanley when we drill down to kind of this level in terms of their recent investments, and whether or not you can relate it back to my favorite audience question so far, which is just phrased hockey stick ? And I think with regards to the top 10, there's no better demonstration of the hockey stick effect than Morgan Stanley surging 12 positions in 24 months. And so is that another X factor that the rest of the index has to contend with, is that the nature of AI transformation is limited evidence of ROI while you're making these investments year over year. And then once those immunities kick in, you go asymptotic, which almost underscores the urgency of the banks that aren't having this type of forward momentum at this current moment.
Yeah, that's such a good question, and many good points in that. I do, I do want to say that it sounds like the top 15 is the new top 10. Is that a phrase that we might coin on this? Because to Daniel's point, those 15 banks are neck and neck. The scores are very tight. Everyone's moving up really fast, right? And the rollouts are coming thick and fast. So there's a lot of strength also just outside of the top 10. But to your point about this hockey stick question, which is really interesting, because it is back to this point about that flywheel effect, like that is kicking in for so many banks that that we're seeing this sort of rapid ramp up, right? Coming from, I mean, Morgan Stanley comes from a very strong base already, and they partnered with, famously, I think most on this call would know and remember, partnered with OpenAI back in 2021, I think it was, or early 22. So well before ChatGPT got released, and they had this foresight, as in anticipating, maybe not precisely a ChatGPT, but that this was coming, and so they better partner with the businesses that are developing this new type of AI. And so there's been a ongoing and sort of many years of thinking about, all right, so with this Gen AI type AI that we now have potentially access to, what does that mean for the things that we need to do at the bank to really do the plumbing, as we always talk about, that rewiring and the data in particular, and really getting that data in shape. So having focused on that for a long time, and really thinking about this sort of the scaling and the getting the AI into every nook and cranny of the bank, not just over in wealth management where that partnership started out. And so I think what we're seeing here with Morgan Stanley, this, as you can see on the spider chart, like really strong talent pool, talent capability has always been there. It's strengthening even further, which was part of why, part of the reason or the driver of the lift in the ranking. So as that flywheel effect happens, you're also just hiring a lot more people to getting those use cases into production, and really testing out also all of that agentic AI use cases and the workflows, and getting, it might be deterministic agentic AI, but still sort of moving forward on that and behind the scenes, and strong on research and patents, and strong on all of those sort of innovation, sort of core capabilities, as I think we would call them. And then came a jump in the rollouts, as you can see on the spider chart, that executive positioning and the narrative sort of strengthening, which means, sort of we saw the rollout of Debrief last June. We've seen the rollout of the research ChatGPT in October, which was used in investment banking and in sales and trading and on the research side. We've also seen in January the rollout of DevGen AI to help accelerate the bank's software modernization efforts, and then also the bank starting to talk a lot about like the impact that this is having, right? Mike Pizzi goes out and talks about the 280,000 hours saved of this rollout. And of course, we're just, in the public domain, this is just the tip of the iceberg, but you can see the ability, if you can roll out this and have that kind of impact on the bank's, hours saved, for example, there's so much also happening within the bank that we can obviously see from the outside on the talent that they're hiring. So if we're double clicking on, Colin, as you asked about on the Morgan Stanley rise, this is one of those examples of that hockey stick effect, right? That this positive flywheel that's starting to happen, and this is just getting started. We're a lot is happening, but we're still really early days, right? When you see this hockey stick effect take further effect, right, you're going to start to see it, this really hitting not just sort of mentions of impact on use case rollouts, but really hitting the bottom line probably in 1 or 2 years from now.
Yeah. And I think the thing that really stuck with me from your description is this distinction or this delineation between banks that are saying everyone now has access to these Gen AI tool sets, versus a bank like Morgan Stanley saying this tool set reviewed 9 million lines of legacy COBOL code, which, they might not specify the dollar figure, but people can do the math in terms of how many traditional software engineers unassisted it would take to pull off that same feat.
But if I could maybe, Colin, can I
go ahead.
add to that? I think also when we're looking at to your point about rolling out, your co-pilots or your large language model tools for the entire company, one thing is to roll them out to part of the company, right? Another thing is to roll these tools out to the entirety of the company, and then tracking not just the licenses are rolled out and the sort of metrics of uptake, but also the surveys that are being rolled out across all of these banks, looking at what is actually the efficiency gains. And it takes time. People need to get acquainted with the tools. You need to have champions. You need to see, your next door neighbor using it and being able to go home at 5 or 10 or whichever bank you're working in, and sort of really see the benefits of this. And sort of now we're starting to see sort of early reports on 1 to 2 hours saved on average across the bank, to sort of 4 to 6 hours saved, on average across the bank. And that means you've got some super users. But back to your hockey stick point, that's also going to see a hockey stick, increase. And that's when you can really start to think about reinvestment or cost cutting. And that's then going to start hitting the bottom line. But again, if you're only rolling that out now, right, it's going to take you a year, if not 2, before you can really start to get those benefits in.
Yeah, it adds up quickly. And Daniel, I think we'll move along pretty quickly, but I did want to ask, for the benefit of the wider audience, obviously what we're showing today and in the report is the tip of the iceberg in terms of our data and what people can do when they have access to that data. Can you talk a little bit about how banks use some of these performance profiles that we're teasing here to inform their AI strategy or their AI decision making?
Yeah, and I think, like, in my own life, before I joined Evident as a consultant, just having indicators and objective markers to show progress was one of the key questions that I was asked every day by bank executives, right? So really, the index really brings a lot of value and brings that fact base of objective indicators that really instills that discipline into the bank's AI adoption journey, right? And the reality is, like, there's no one size fits all, right? We've seen it with Capital One, right? The fact that they punch a little bit lower in leadership doesn't mean that they are not very strong on AI adoption. So you can choose what is your path, right? But it's excellent to have such a deep set of KPIs, right? Because then you can use it to identify strategic opportunities. And we've seen how many banks have set up AI research teams off the back of knowing that many other banks were really getting benefits from that kind of team. You also can use it to validate your strategy. So, like, making sure that, like, your choices that you're making are really adding value, and seeing what the market is doing as well in that, because keeping up with the market in this space is very difficult because of how dynamic everything is, right? We've seen so many rollouts this year, so many people talking about number of users, people starting to talk about the usage, right, itself of the tool. So it moves really quickly. And then I think we've seen some banks as well and we've had some banks tell us that they're using some of these indicators as internal KPIs in order to measure their own performance, right? So I think it's a very valuable insight. And as you move to be data-driven organizations, AI-first organization, having that line in the sand is very important.
Yeah, and I think another thing that I've found with our clients is that not every bank is interested in all 49 other banks in the index. They're interested in their peers and competitors, and that often has a regional connotation, which is another way that obviously we cut the data, is looking at the regional leaders and looking at the banks or parsing the banks by virtue of where they're headquartered. And so this is that view of what is the spread across the 6 primary geographies that we look at between the top performing bank that's labeled versus the bottom performing bank. And some interesting points here is that while all the regional leaders stayed the same across the 6 regions, that spread, or the delta between the top bank and the bottom bank region by region, increased year over year. And it's really that disparity factor is really pronounced in the US market in particular. So I kind of wanted to stay, Daniel, with you and ask if you were surprised that the bifurcation that we're seeing in the overall index, were you surprised that that's carrying over into the regional analysis when we get down to this level of altitude?
Yeah, not really, right? The reality is, like, when you see the names of the banks that are in the top positions, right? You really realize that despite being in a different market or being a different ecosystem, a lot of the same dynamics happen. And to be honest, the challenges of rolling out AI are so intrinsically linked to, up to today, how you manage your technology transformation, how you modernize your systems, how you built up that modern infrastructure, and also the culture of your organization to embrace all the change that AI brings and technology change brings. That when you see names, right, Capital One, we've discussed, JP Morgan, we've discussed, you see banks like BNP, right? You're not surprised because we've heard a lot about how far and how long they've been working on their journey to cloud as well, right? So it's not surprising, and it really shows that early investments are paying off for all of these institutions, right? It's clear that putting technology and analytics at the top of the executive agenda is really paying dividends when it comes to deploying AI, right? And the reality is, like, as we see some of these banks pulling away, right, there's going to be a credibility gap. And to your point about gaming the metrics, right, there's so much you can talk about what you're doing without actually doing, right? And the market believing, especially when you're doing all of this as we collect public information, is all in the public domain, right? So you're not going to be believed at a certain point if everything that you're doing is just talk, right? You really need to show investors that, like, you're making progress. And this kind of bifurcation that we are seeing really shows that those banks that invested early, that really doubled down, are really now pulling away. So those that are behind really need to up their game quickly so that they can continue in the same trajectory, right?
Yeah, and Alexandra, a lot of change going on in the UK in particular. A lot of activity at HSBC. Lloyd's is one of the biggest movers in the index. But I think you just published a week ago, in the aftermath of the US UK technology prosperity deal that was on full display in London and at Windsor. You published a little bit of a critique about where the UK is with regards to the more global AI race. Do you want to give the Cliff Notes version of that?
Definitely. Yeah, I felt very grumpy when I wrote it, so please bear with me here. Grumpy, not grumpy for no reason. Grumpy because, it's slightly frustrating to see, the UK obviously still very strong. I'm not saying that it isn't. There's a talent pool here that is really great. You've got lots of universities that are focusing on emerging technology, and out of that comes a very vibrant startup scene. There's no doubt about it. Lots of startups here that we see. The frustration comes with the fact that I don't think that the UK government is doing enough to foster a environment where the startups stay, because very few of the startups stay to do their series, beyond Series B, and they would go to the US. And with the startups that are, AI startups we're talking about, of course, and they go, right, they take the talent with them. So we do see that talent drain. So that is leaving. And of course, we've got DeepMind here in the UK, which is phenomenal organization, and sort of there still is a talent ecosystem, but it isn't as strong as it could be. And now I think we're talking about an existential race for enterprises and banks in particular. There's also an existential race going on between nations, and the reason for this is, of course, not only sort of tech dominance is usually a very good idea for any country, but it is also because it will unlock future growth. It will come with it. It will be good for the labor market. I know there's a lot of discussion about jobs being lost, but we cannot forget that in the time of the emerging internet, for every 1 million job that was lost, 6.5 million jobs were gained. And we're, set to see a very similar pattern emerge with AI. It will be different, but it will probably follow similar path. But with that, you're with being on top of and having a strong AI policy at a national level, unlocks that growth, unlocks the productivity gains, helps solve a lot of the big societal issues. So there is that sort of, question around, could the UK do more to double down on keeping these companies in the UK, double down on focusing on supporting AI deployment? Because again, the race is at the enterprise level, but it really is also at the tech level, and the tech companies, share prices are contingent on the deployment activity is at a certain pace. If that is why that MIT report had such a big impact on the stock price, was because there was a questioning of how quickly is this AI deployment actually going to happen. And so that was maybe a bit longer than some cliff notes, Colin. But
you, Alexandria, you still sound grumpy. That's all I'm going to say.
Yeah, that got me really grumpy. But that sort of, here endeth the grumpiness and the cliff notes of that article. Back to you, Colin.
All right. Well, we've been dancing around the elephant in the room for the presentation. So I want to kind of close on this note, because I think it's an interesting question and a provocation, is that whenever we're done doing one of these rankings, one of the things we do is we always take the results and then we run it against correlations of other KPIs that aren't in the scoring, whether that's stock performance or cost to income ratios, or in this case, the number of AI use cases being disclosed. And as you can see in the scatter plot, when we plot the enablers of AI, the sum of talent and innovation and leadership and transparency against the number of AI use cases being talked about in public from each of those banks over the last 12 months, we're starting to see robust and growing correlation between the two. And I think we think this really points to how the enablers unlock ROI and unlock outcomes on a progressive basis. And so, Alexandra, I kind of want to conclude with, I think, the most important question, which is why, in the most concise form, why does the index matter? How has its influence and its impact changed since it was launched only back in 2023? And what are your big takeaways from the last week of talking to the banks and talking to the media and talking to our audience here about what this construct is for moving forward?
That's a very big question when we have 1 minute.
You got 2 minutes.
And we need to do some housekeeping at the end. And but I very quickly, year one of the index was launched launched in January 23, just after the release of ChatGPT. And what happened then was, every business, and the banks in particular, they were fully focused on, what is our strategy here, right? You've gone from having traditional AI being able to touch a certain proportion of the bank's activities. And now you've got Gen AI, which means you've got AI that can touch 100% of the bank's activities. And so we need a strategy. And sort of when it's thought about, AI and sort of was over here in tech and IT department, it has been pulled fully in to sort of the center and the core of every conversation in every board meeting and every strategy meeting. And we know, obviously it is being debated across the banks, all the way from the top throughout the banks at every level, every day. And so it's become a real center of focus. But that definitely was something that concentrated the focus. And it's just, maybe, lastly, the correlations, we expect those to get tighter and tighter. Our year two of the index, we did start to track this. And the year two of the index, we refined the index further. We started to look and track the use cases. And now being in year three of the index, it's just great to see that it's becoming more and more an established reference point for the banking sector. And we work very hard to make sure that it is built properly and it's a constant attention to every metric in here. So hope
excellent. So we are at time, so we're going to conclude. I want to say that, as you can see, I'm flashing through, this is the tip of the iceberg of the data and the key findings and the trends that are in the report. In particular, I'd really like to draw the audience's attention to the leadership chapter, where we're seeing year over year, the number of banks disclosing the number of active AI use cases has doubled to 25 banks. The number reporting projected ROI on AI use cases in the future is up to 7 banks. And the number of banks reporting realized current ROI on use cases is up to 4 banks. And these numbers are changing really, really quickly when we look at comprehensive ROI. And that's very well documented in terms of where we're finding those numbers, how people are talking about them, and obviously the new folks that are joining that cohort like TD that Daniel mentioned. With that, thank you very much for everybody's time and attention over the course of the last hour. Thank you for your questions. We are currently scheduling diagnostic sessions with all of our members to walk through not how you rank, but why you rank the way you did. Please reach out to your account manager to learn more about that, or click the Join Us tab on the website to get a little bit more details on this part of the product offering. And last but not least, 8 days till the Evident AI Symposium. We are at or over capacity. We hope to see you there in person, but I should also note that it will be available via live stream by way of our partners at Bloomberg. So check back on the website on the morning of October 23rd when we kick off the agenda at 9 a.m. Eastern Standard Time. And thank you, Alexander, and thank you, Daniel. I'll see you here in New York in short order.